Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Friday afternoon. I hope everyone in the US had a fine and nice, enjoyable 4th of July. Now, before we jump into it, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And last but not least, for everyone tuning in for the first time, you can find everything that I'm using. So the charting software, the broker, the strategy I'm following, and so on, all linked down in the description below. And the one thing I really recommend is that you check out the Elliott Wave principle. As said, you can follow a link in the description below and either read the book online for free or get yourself a physical copy. Now, with that out of the way, let's jump into it and hide the chat message. There we go. So I completely, in our last stream, I completely missed that we had the 4th of July in between, which is obviously a very important holiday in the US. So that's why there was no stream yesterday. Today we have end of the weekend, which means the few options that we have are about to expire. From the look of it, it looks like we've been right and that we will not finish the week above 30 in GameStop, which means our call options are going to expire worthless. We just pocket the premium of GameStop. And our put options are going to expire in the money, and we'll get another couple of shares with an average price of around 24 something, pretty much like breaking even, which is okay, which means that today before market close, the latest, I will roll those options, which means I will close out those and already sell the ones for next Friday. We don't see the option premium yet because the markets are still closed for another, there we don't have a timer here. Oh no, there was also a timer in the top right somewhere, for another 2.5 minutes. Then we'll get to see the new option premiums. And obviously, if we sell the options today, we'll get a higher premium than if we do it on Monday. For the put option here, we will get the shares assigned during the week. So those I will have to sell on Monday just to be safe, because there's always the chance that after the options can't be traded anymore, there's a limited period of time where the market might still go higher and we might not get the shares assigned. And in this case, if I already would have sold another call option, it would not be really covered. And that would be potentially very, very high risk. So we're not going to do that. So today, before market close, I will roll those options and basically, collect the premium for next week already. And then on Monday, we'll sell another covered call for GameStop. Outside of that, GameStop, from the movement, originally I expected it to be like A, B, C, and we'll get another push down, but we saw on the 3rd that we actually are already here in this area. We're still within the area. We bounced on the 61.8 retracement here. So we can see actually multiple times. So I think today is going to be a decisive day, because if we get another push up here, then probably the corrective pattern is finished and somehow we have 1, 2, 3, 4, 5 finished here. If, however, we get a push down, then that's likely 1, 2, 3, A, B, C in some way, although I'll have trouble labeling that, to be honest, and then the next 1, 2, 3, 4, 5 down. So I originally expected that we might get another push in the lower area. Considering that I'm holding shares, I'm obviously hoping or waiting for GameStop to go higher slowly. But it doesn't mean that in the meantime I could not expect it to go down first. Although it looks like I've been wrong here. Now, it also looks like I've been wrong in SPY, because there, obviously, if we look on a daily chart, we now are, or not even daily chart, we now actually on the 3rd already finished higher here with a new all-time high. Until that point, there was still the option that might be something A, B, and we get wave C. Looks like the correction finished here, and that's basically the next 1, 2, 3. So still a push higher, 4, 5. I'm gonna stay out of it for now. I don't have the time to look too much into the SPY options at the moment, but gonna keep an eye on it as well. On one hand, if we look on Nvidia, there I would say it looks like we still have room up, as I mentioned lately, at least into the 130 area. It's possible that today we might have a red day or so that currently there is some ABC pattern playing out, so a corrective pattern here on a small scale for a 1, 2, 3, 4, and then 5. And then from there, that would actually be the moment where I probably would get some put options and basically, or potentially profit on a decline in Nvidia. Was surprised about Tesla's move. We're not invested in Tesla, but if we look at Tesla on a bigger scale, it actually, we can ignore that fluke here. It actually looks like A, B, C, and that C does not justify or consider a strong move like this up here. So yeah, so the question is like, what the fuck's going on here? Because there's also not much room. So for that on the weekly chart, we see that there's also not much room for this to go further, because if that would be, unless we get a bigger ABC, 1 second. So unless we're still in wave B somehow, so that will be ABC. Yeah, maybe, yeah. I mean, that's the beauty and the downside of Elliott Wave Theory. There's a lot of different patterns that can be valid at the same time, and then only if you look close enough and work your way through the different time frames and so on, you might figure out the most likely one. But yeah, it's possible that that actually is basically wave A. Now we're in wave B, which still hasn't reached the minimum area, so Tesla would then go a little bit above 300. And then from there, we would then get our wave C. But it's also possible that the entire correction is over here and we just get another 5 waves up. So yeah, like, I don't know. Personally, I feel like, I mean, it might be like some doomsday nonsense in quotes, but I feel like the markets, and especially the Magnificent Seven, are hugely overvalued, and we just have to have a massive crash at some point. But yeah, who's to say that that will be very soon, and that there won't be a couple of months more of upwards movement first. So keep an eye on it, and hopefully, if we're lucky, we catch the right pattern to profit on the way down. I'm gonna stay out of it for the upside, because as far as upside goes, I'm actually most comfortable with having my money in GameStop, to be honest. And so that's where we stick around. Now, markets open, so we see premiums. We see that the $30 call options don't pay that much for next week. Although we also see that we could, so we're gonna set an order to buy back. We don't wanna have them expire. So to buy back our $30 call options for, in that case, obligatory, so we have to buy them back, obligatory dollar. So yeah, like if the price goes down a little bit, that will trigger, or as time passes, that will trigger, and we don't have the risk of or we don't have the risk of having shares called away. And yeah, I mean, I could roll it now. How much did you get premium overall? Like, I'm always, I usually don't want to give premium back. So we got like $276. So theoretically, right now we could get 233. So I would only give $40 back if I sell them now. But on the other hand, the premium for the $30 call for next week is only around $60. So 60 times 4, it's another $240. So, and if the price goes down, which helps us secure more profit today on those, on the other hand, it would reduce the premium on those $30 calls. So yeah, it's like always hard to know what's the right choice. If I buy them back for $5 a piece plus commission, so it's $6 times 4, so it's $24. So I think that's kind of okay. Yeah, let's go and get rid of them if it fills. Not sure who would buy a $30 call option today, but yeah, so. Not even filling, so no volume there, or at least not for that price, although there's literally just $1 difference. Again, we're talking about 100 shares, so 5 cents translates to $5, 6 cents translates to $6. So yeah, what else do we have for today? So just to consider, so GameStop, yeah, if we zoom out a little bit, let's quite chaotic. So the big question is, like, did we already finish the corrective pattern that we have down here? And the sad answer is, like, time will tell. The pattern here makes it look like it's possible because that's not a clear 3-wave pattern like ABC, but it looks like a 1, 2, 3, 4, 5, 5-wave pattern on first glance. Although this pattern here points towards there might be still room downside. So it's like, yeah, like it's always like sucks if you do a live stream and then your opinion is it goes up or it goes down. But right now, short term, yeah, like I see patterns for both ways. So yeah, it is just what it is. And we'll just have to wait to see for the chart to become a little bit clearer. Although I tend more towards the from here we are going up, so we might go a little bit down, but that overall we're going up from here. Now the question would be, or one interesting thing would be maximum pain for today. Would be at $23.50. Not always, but here and there we finish exactly at the max pain point, which would basically finish some kind of ABC corrective pattern, which would then, however, be bullish for next week because that likely would then be 1, 2, 3, 1, 2, and the next week we would have a stronger upward movement. So that would work as well. Now my $30 calls become less valuable, which means it's actually more likely that somebody would still buy them for $5 or not. I don't know why that order is not filling. Do I want to, I mean, what does $4 difference? Doesn't really make any. Yeah? So let's see if we fill it for, yeah, there we fill it. Okay, so I'm gonna just have to update my trades on option strat. So we now got, yeah, 006. So option strat, we close trade, and we closed it for, we didn't close the shares. So yeah, 006 is actually what we closed it. So confirm, it says 114. I don't, like option strat there also considers the share values, which is a little bit annoying to manage the prices here because technically we have the shares for, first of all, we have 400 shares, and second of all, we have it for an average of 25 and, or actually 24, blah, blah, blah. So, but yeah, still to keep track of that, and also have to update it in Theta Gang. And in Theta Gang profile, yeah, that's not as nice. Open, and we have the covered calls that we just bought back for 006. So we made $250 this week on those. And we still have the cash secured put that will trigger, so we'll likely get those 100 shares assigned. However, for now, we can then go ahead and sell the $30 put option. We can sell 4 of them, and at which price? $55. So that times 4, so 200 something dollars. I mean, we could get more if the price moves further up, but we're gonna take those $200. It's not bad money for a week. So yeah, let's look at the chart quick. Yeah, I mean, yeah, I mean, we're not gonna try to time this better, to be honest. So we're just gonna go with that. So 57. Okay, let's see if we can get maybe $60 for it. So, but okay, we cannot. Price apparently just dropped a little or not. Yeah, like, yeah, let's go with 55. And okay, then we actually set it for 100. So if we can sell them today for $100 per piece, that would be nice. And just have to adjust that to good till canceled, update. And that would, however, require some movement up. If we go down, we get less for them. So, but or 56. Okay, let's take 56 for them. $55. I don't really want to sell them below $55. I mean, it doesn't make much of a difference, but still. Yep, now they filled. So we sold 4 new covered calls. So we can again update. First of all, here, manage trade, open trade, GameStop, covered call, 30 is the strike price, expiration is next Friday. Just double checking, didn't do anything wrong. Yeah, 12th of July. And quantity was 4, and we filled at 55, technically 54.5. Okay, so 0.45. Okay, so upload trade, and then here we can also build covered call. And again, that's the point where their option strat considers 4. So, and we got them at 0.55. So most, hey, what? That's also considering an increase in share value. Yeah, that's like, oh god. So technically we would have to enter those here at 30 because that's where we got them, but then that screws up the graph. If I remove that, then yeah, like, god, is that annoying? Yeah, so let's do this again. So covered call, 2 positions, 400 shares that we have, and we sell 4 covered calls, and we sell them at 0. Okay, we're just going to save that trade. And save trades now, that's there. Although we have, yeah, July 12th, so yeah. The return is wrong because it considers the share price. I don't know how to do that here without considering, because like technically we bought them at 30, which already would show as a loss. Practically our average for those shares is officially 24. So, but that's considering the premium we earned, which changes the projected profit here. So technically I would show them here as 30. And oh yeah, we didn't sell those. We sold the $30 covered calls, of course. Yeah. So just double checking. Yeah. $30 call. Yeah. Okay. So, and then yeah. So it looks like this. Yeah. So I think that should be fine. Few safe trades. Okay, now it shows like this because the shares are at a loss if we consider them at bought at 30. So yeah, yeah, there are only so many tools available out there for managing the option trades or keeping track of them, and none of them are perfect, or at least the ones I found. So now we have those call options. The put options, there's no point in trying to buy them back. I mean, it just would mean if I buy them back, I just keep more cash on hand. So here we'll have a commitment of $2,400. So which still leaves us with extra money in the account, so that's perfectly fine. And gives us the right to sell more call options, plus if we see a rally in GameStop, to actually profit more on the way up. So don't see really a reason to buy that back, especially not at a loss, because again, it would mean giving money back. So yeah. And I think that's going to be it for now. So I said it's possible right now from the pattern that we get to see an ABC pattern here, which would fit with touching the max pain point at 2350. And then maybe today we finish in that area, and then Monday we start our journey up. However, from the bigger pattern, I still see the option that we still get another push down into the area of 20. Either way, we'll just have to wait and see. And that's also exactly what we are going to do. Other than that, I think we'll just gonna stay out of things for now and enjoy our option premium. So to slowly build up or slowly earn more cash while we have shares, we sell calls, but always only at or above our strike price to not risk losing money on the shares, even though it means missing out a little bit on premium. And when we don't have shares, we will sell cash secured puts to earn the premium on the other side. to slowly grow the portfolio further. And every time we have a decent pile of extra cash and got shares assigned, I'll transfer them out to my computer share account. Anyway, that's going to be it for today. As usual, if there would be some strong movement in GameStop later today, I might come online spontaneously. Don't forget, hit the like button, subscribe, enable notifications so you don't miss out on those spontaneous live streams. And outside of that, I wish you all a very, very pleasant weekend. And then we see each other on Monday with another episode of Daily Market Mastery.